All right, Dave, you are back. We dragged you back here again.
You dragged me?
Well, it's been a while because we had to drag you back from Europe. Because there was a point in time when I didn't think you were coming back. How long were you gone for?
3 months.
Was it only 3 months? Seemed longer. I think it seemed longer because it felt like you were in a different place every 3 days.
Yeah, well, it definitely felt longer than 3 months when I was out there. But I think also, then I did the winter thing for like a month and a half in January, February.
Oh, you did that too. Yeah. And then you were back for a bit. Then you left again. I think that's why.
2023 was
no, but it was cool, man, because you've worked your butt off. You know, in the relatively recent past, you had a kid. So you guys, you were able to kind of benefit from the work you put in to then kind of adjust things a little bit, spend some time with the family, young families, which is kind of cool, right?
I did it backwards, right? So right. Started the company, and then everyone laughs at me because like, wow, you were 43 when you had your first kid. And I'm but I will say this. Yes, it's going to suck, you know, in 10 more years when he wants me to do a lot of stuff and my knees are all messed up and all that fun stuff.
No, they don't have to be that. They don't have to be. I'm telling you, because I'm seeing it now, like, because a lot of people say that. And so I'm 45.
Yep.
And, I'm still, because I work out with a lot of younger guys regularly, and I'm talking guys in their 20s and 30s, and have things changed a little bit over some time? But I mean, I'm not too far behind them. Sometimes I'm ahead of them.
You're a wonder kind, though.
I don't know.
You're selling yourself short. You're in shape like for 100 years, and you're only 40 years old.
I think it can change. Yeah, but the good side to it too is that there's a lot of things in place now.
Yes.
That you get to, there's good and bad to everything, right? So, but you get to experience the family side of things a little bit differently than you would have if you're having a family in your 20s.
I consider it so lucky, man. Yeah. Honestly, like I would have, and sometimes you have to do a self-assessment, right? I mean, if I would have had a child in my 20s or 30s when I was that deep into growing and building a business, and like my mentality at that time was like, I got to become the #1 broker in Canada. And so that was like my goal, and I didn't slow down. And then even when I got to that goal, I didn't even slow. I was like, hey, now I got to do it for many, many years in a row. And so if I had a child at that time, I definitely just don't know. I would have been doing someone not enough justice, either to my business or my child, or my wife for that matter. But I think doing it now, I've been so lucky. I mean, who gets to go and spend 3 months in Europe with their child? He was like just had turned 1,
and their wife,
and of course. Well, at the time, she was my fiance at the time, so it was kind of cool because it was the whole point: get married out there. And I'm lucky. I scored a beautiful Greek goddess, and so it was like natural to go. And I'm completely uncultured, by the way. I mean, if you look at me,
well, not anymore. Now that you've been around,
well, that's the thing. I've inherited this culture, right? But
there's definitely been a shift since you guys started dating. There was definitely a shift. It was
100%.
We're like, hey, what happened to all the Pittsburgh Steeler gear that Dave used to wear? Where is that?
Well,
stuff?
now she dresses me too, so that's another thing. I'm not allowed. Actually, today this is actually me. I dress myself, but I mean, in reality,
I'm sure she disapproves.
She was away she's gonna see this and be like, "What are you? Why did you? I should have dressed you." I'm like, "You weren't here. Sorry." She had to take little Max to some swimming class or something.
Yeah, that's cool.
I'm enjoying it. Honestly,
that is bucket list stuff, man. So it's cool that you got to do it. Like it really is, right?
Yeah. Well, no, and you guys. Well, the cool thing is you guys like. We took a lot because I know you and Tom go to Croatia every summer, and I mean, I remember seeing the videos, and it's cool. Yes, hanging out at a cottage in Ontario, but like there is something about summers in Europe that is just like, it's like I'm already trying to plan my next summer trip in Europe. Yeah,
I don't know what it is. A lot of people will say it's the lifestyle, like everyone's more laid back. But when you're on vacation here, you can be more laid back too, and people are. But I think because when you're closer to home, you naturally get dragged into more stuff that you would normally do, like your day-to-day stuff. Whereas there, your routine's totally thrown out of whack. So you're forced to kind of just explore, chill, and it does help that there's like a cafe, every 3 steps.
Well, the thing about, what I noticed too, also the time zone. Yeah. Right. So the time zone is awesome.
Yeah.
Because really it's like when we were in Greece at 5 p.m. Greece time is when it's 9 a.m. Back home. So it was like, okay, cool. I can actually spend the entire morning and the entire afternoon with my family at the beach. And then I start work at 5 p.m. and I would deal with Max until he went to sleep. And I would just work till like 1 a.m. You know what I mean? So it was actually like, I love the European time zone if you're able to work remotely, because it actually lines up nicely. Because yes, it'd be nice to be out in Europe at night. I mean, it's cool, but Europe's awesome in the mornings and during the day, right? I mean, you get to see everything. Go to all the markets, everything.
I'm a morning person, man. You don't have to tell me that. I love that stuff.
See, I'm not.
Oh yeah. I get up and I'm wandering when it's super quiet and like the water's still,
I had a feeling you were that guy.
Oh, I love that stuff. Like I will just go for like walks. I'll throw my headphones in. I'll go for a jog or walk myself, hang out by the beach. Actually, I don't even drink coffee, but when I'm there, I'll drink coffee just for some reason. I'm like, I might as well get an espresso because I'm sitting here by the water. What the hell? Might as well do it.
I'm remembering this now because when we would do the weekends at the cottage, right? We'd bring you and Mike and them. You were always the guy that was up in the mornings. Like and you'd be on the dock or something like that. So
yeah, just go chill.
Like, why is Nick up? It's your weekend. Sleep in, man. What are you doing?
I can't do it, man. Okay, so hold on. Before we continue, because we will talk about mortgages. We got these tequilas here. They're warm. We didn't even make them
decided
cold.
We have to we're so close to Christmas.
Dave came in. We're going to drink some tequila. I'm not shooting this. I'm sipping it just for the record.
Are you? I'm shooting it.
Oh, it's actually not bad.
Actually, it was not bad.
I'm pretty sure this is the organic.
Which one was that?
This is like an organic one that's actually not that expensive a bottle, but it's quite good. We'll try this Hornitos after.
That was actually really good.
We'll have one. Yeah, it's pretty good.
Okay, can I just want to throw something out?
Yeah.
And I apologize to anyone who really likes this. Can I just say that 1942 is like the most overrated tequila that I've ever drank? And I don't mean this as a bad, like I'm sure people have right now are like, no, I gave that as a gift to someone. I think I've even given it as a gift to people. It is just very smoky, and it's just got like a profile that is different for me. And like, lately, Casamigos.
Yeah, Casamigos is good.
That is a solid tequila. Like it doesn't get the same hype as like an Azul or whatever, but I mean, that's a great tequila.
The reason I liked 1942 when we started buying it, because I found this bottle.
By the way, I'm sorry if I'm totally dissing it. I just I don't know what it is. I just it's weird. Like I take the shot and I'm like, wow. Like if you see my face after 1942, it's not the same as if.
Well, everything gets overhyped, right? So, but when we had initially found it, I don't know why I was trying to buy a bottle. The Class Azul.
Yes.
And I couldn't get the Class Azul. It was sold out.
There was a time that you could not get them anywhere.
Yeah. So, but the LC, so this is years ago. This is the first time I found 1942. I'm like, they have this bottle. Let me try this one. It was cheaper than the Class Azul.
Yes.
It was like $140. And when I drank it at that time, I'm like, wow, for that price, this is a great tequila.
Compared to Azul, yes, it's value-wise, way better.
But now that I look at the price, I think I bought some, I don't know, because for a while there, you couldn't even buy the LCBO. You needed a restaurant license. So we had someone that was ordering us a case at a time. But like, I think the last time I saw the price, isn't it like $350 now or something?
Well, that's my point. 1942 was great when it was a regular price. Now...
Yeah, it's not worth it.
I'm like, no, I'd rather just spend a little bit extra, get the Azul.
Yeah, I agree. Or there's like this bottle is a really nice organic bottle. I think Tom found it or someone recommended it, and he's like, hey, this is actually pretty good. And I think this is like an $8 bottle.
Can you do me a favor? Hold on. Like, let's hide this. Like every time you guys, 1942, you guys ruined it. It says you guys, the price went from 140 to 300.
We were buying a lot of.
You guys made it crazy. So let's hide. We don't want anyone to see what's going on here. So,
but
I don't need you. Now this is going to be a $200 bottle in like another 3 months.
It won't take long. Yeah, it won't take long. Yeah. Here, we'll turn it around. So, hey man. Okay, mortgages. So first, let's go back to Europe. So you were working in there this year.
Yeah.
But was it an easier time to work there this year? Because I mean, it's no surprise that, the real estate market is not as active, mortgage market's not as active, volumes are down across the board. So does that make it easier to function that way?
You potentially could have thought that I planned this entire thing, that I planned that I was going to get married in Europe after doing a 3-month trip there while the market had hit its lowest point in 20 years. Like,
is that when the lowest was for mortgages in the summer?
Oh yeah. Well, I mean, when I just know this, like, for 19 straight summers, we were just ridiculously busy. Like you can't even there's no time.
Yeah.
It's just constant.
You rode a wave of momentum of easy money policies. We did too.
Yeah. Oh yeah.
We knew we were benefiting from it, right?
Yep.
That wave was a really big wave.
Yeah, it was tremendous. And then this year, I mean, and the crazy part is like, if you think about it, people are always like, well, the top was February 2022. Well, yeah, like, sure. But they were still fairly like rates. It's not like all of a sudden rates went up 4% in the overnight. It was, remember, that first raise in March was just 0.25%. The next meeting was April. And
Don't
they did
forget
a half.
They paused. Remember in January they paused? Still?
Yeah, well, I'm like, that was this one. I'm talking about even last year. Think about last year when they first started raising, right? Think about last.
But in January before.
Yes, they didn't do a raise. And everyone was like, why aren't you raising?
Yeah, like it's obvious the market is on fire. What are you doing?
Well, that part was stupid because it's like, well, inflation is clearly now out of control at that point, and they don't raise.
Yeah, that was weird.
Like, why didn't you just throw a quarter on at least to like get the fire down a little bit? And they didn't. And
then in March, so go on. So
they raised obviously in March. So as you know, and I'm sure what your activity would show this, think people were still buying homes in April and May. And remember, if they're buying homes in April and May, that means they're not closing till June, July, August. So last summer was decent, but then it was. The interesting thing for me, and when I noticed things were going to get troublesome, was normally June, July, August ramp up. And it went June, peak, July, August. And I was like, haven't seen that in 20 years. And then it just September, October, November. And I think by then, you've already kind of made your thesis. And we were already starting to look. And I think, we could already see the Bank of Canada was making aggressive moves. I think even newsletters we were sending out to our clients were like, look, it's, this activity and this volatility and this aggressiveness that they're showing, there's a flip side to that always in markets. And you can't, what they did was very obvious to, I think, a lot of us that they will have to reverse course. It's just when are they reversing course? And that was, I think everyone was hopeful. We were all hopeful. Hey, they're going to reverse by next summer, which would have been this summer that just passed. And that didn't happen. And so leading to answering your question, this was definitely the saddest summer of transactions in mortgages. But yeah, definitely was advantageous for me to be away, and I had a lot of, I've been lucky. I mean, I think, look, if you're not taking the opportunity when the downtime comes, then you're missing out, because in this market that we are in real estate and mortgages, the bull runs are generally, consisting of 20 years roughly, and the bear runs are sometimes 2 to 5. So, when you have a bear run come, first of all, you don't panic, and, you have to reassess and you have to lean yourself out. But, you should be taking that time. Finally, if you should have some precious time you can spend with your family and do all these things and get ready for the next bull run that will happen whenever that happens.
Yeah, I was just talking to someone at lunch, another business owner in accounting, and they were, they're in the same type of situation. They're just, they're having, their business is still going and they're having some challenges, more staffing and things like that. Yep. But they're getting squeezed because they have leverage either on an office or some other, assets they own, wherever the case may be. And they're just kind of like, trying to juggle things around. It feels like most business owners I talk to now, they're like, okay, we're going through this. Everyone's kind of shooting for a specific end date that whatever they feel is going to be comfortable for their business, and trying to just kind of make things work until that point. Some better than others and that type of thing. But it's like everyone's kind of getting squeezed across the board, no different than property owners across the board are getting squeezed. And you're seeing the slowdown in everything, right? Because of it, right?
I've talked to a lot of real estate agents and a lot of mortgage brokers, and there seems to be this, pressing idea that you gotta survive till the summer.
Yeah.
Right. And you gotta make it through. And I think, Tiff Macklem the other day, as much as I hate to listen to him because he lied to Canadians, in my opinion, back in 2020 and caused a lot of unnecessary hardship for a lot of people. But, even he the other day, not only was he mentioning that finally, first time ever, saying that he's anticipating rate cuts would likely happen in the second half, but, he talked about how like max pain is coming. This is where we're going to feel it. January, February, March, April is where, I'm not talking about just mortgage brokers and real estate agents. I'm talking about
the economy
Canadians.
as a whole.
The economy is going to, unemployment should rise. And, sadly, this is what they're this is the game plan that they're doing. They try to do these things to then flip the cycle, right? And, we've been fortunate enough to be in it, but we actually haven't been, you and I haven't been in this, as long as we've been doing this, we haven't been in this nasty part of it. Our parents experienced a nasty part of it, but
2007, in some ways, there was a lot of fear on the market. It didn't, rates didn't go like where they have now, but it got really frothy.
Yeah.
And then a lot of fear kind of stepped in because of more what happened in the US. So it was a little bit more short lived.
Yes.
But we haven't been seeing a squeeze like this before, right?
No, this is definitely, people ask me all the time. I mean, like 20 years you've been doing this. What is it like? Even clients, like we're having contact with clients, and it's like I have to tell them, look, we have not seen things like this. I haven't seen anything like this in 20 years. So it's about, game planning correctly. A lot of our conversations with clients now, it's very different. It's preservation. I have clients that are right now in situations where the only thing that helps them is to refinance their mortgage, sadly.
To use those funds to pay?
To take extra funds out just to cover differences because they're in a spot that, they're getting squeezed heavily. And so they have a choice. Do they sell and give up, or, what do they do? And, listen, for some people, if you believe that interest rates are going to stay elevated, then it would be in sometimes their best interest to sell and go to a different situation. But, if you are of the belief that interest rates are going to come down, and I certainly don't think they're going to come down to the 1s and 2s, but I think if you think that there's going to be rates in the, with a high 3s, low to mid 4s, if you think that's going to happen, I think there's an idea that you need to survive. You need to get to that spot, and then you can reassess. Because
we were talking earlier that we just over the last couple of days, I think the lowest, I guess, nationally 5-year fixed insured.
We got a 4 back in front of it.
It's like it's 4.99. It's just there, but that's just over the last couple of days. So we're in that trend. But I agree with you that to go that low would be difficult right now. What we've seen in the past, when you looked at other kind of high inflationary episodes, 40s, 70s, that type of thing, it seems like it's common. We're only talking about a couple instances for a second inflation spike to kind of come behind the first one. And that's the thing that it's so weird because, again, something else we're talking about at lunch is I'm like, it's like there's no economy anymore. And because they've put so much debt in the system, everything is dependent on these interest rate in the Bank of Canada moves.
Yep.
Right. And it's like, so now that everyone's looking there and they're expecting they need to save us with lower rates. Tom and I always like, what are we missing? Because if everyone's expecting one thing, we're like, it feels like something else is going to happen. Right.
Yes.
So, and I'm like, is there this period of time where, the rate's going to come down a bit, but do we get that second spike again, like we've seen in the past, and then rates come back up? And I'm like, that'd be an interesting dynamic, because even if it did it for another year, that would hurt. That would hurt people a lot more. So it'll be interesting to see if that would be the crusher, right?
Yeah. So I think like I've had a lot of conversations with a lot of high level mortgage executives. Some of these people at these banks. I've talked to economists. And what you say is actually really interesting, because a couple of people I've actually spoke to have come up with a bit of a theory that, Bank of Canada starts lowering rates in the second half of next year. Previous to that, you'll probably have the bond market, which always seems to get, that information a little bit earlier. You probably see fixed rates start coming down. I think, it all depends on how low rates go. But the school of thought is that if you get back down 5-year fixed in the 3.99, 3.69, you're going to create another fairly large wave of real estate transactions. And that's because you have this massive amount of pent up demand on the purchase side. You have a massive amount of pent up demand on the refinance side. I can't tell you how many people are just waiting for rates to come down to refinance.
But how are they? Because wouldn't the penalties for them be pretty enormous if they?
If they were to do it now or in certain situations. But remember, imagine I got a lot of people right now. They're at 2.89 that want to refinance, but they have 2 years left.
Got it.
They got debt. I mean, people seem to think that if you have a low interest rate, that means somehow you don't have debt. And that's actually that's a big misnomer. I have a lot of clients that I look at, and they're making their mortgage payments, and they're certainly happy, but they also partaked in the You know, the frenzy of spending that had happened and had proceeded to
2020 to
2020 massiveness, the craziness, let's say. But so they have debt, but they're not in a position, like they would love to pay the debt off, but it doesn't make sense for them to refinance. And, you know, you also just have a bunch of people that probably want to refinance, but they don't feel like doing it at 7.19% on a 1-year fixed. So they're going to wait. And so that's why I say, just like, you know, we've got this perfect storm coming that I don't think as many people are seeing as that what we're seeing, which is, you know, on your side, the pent up demand is insane on the purchase side. I can tell you the amount of pre-approvals that we do where clients don't buy is at an all-time high in 20 years, right? The amount of times we have to redo rate locks. Do you know how like uncommon that was to have to redo a rate lock after 4 months? Because someone will get pre-approved and then they generally, a lot of times, would buy within that 4-month period. The amount of times now that they're buying within that period is actually at the lowest I've ever seen. So imagine now you've got all these, and the applications are still coming in. It's just you're pre-approving less, and then when you're pre-approving, then they're not buying, right? So now imagine you got all that pent-up demand there. People are just waiting to refinance. And then you have the largest renewal cliff on its way. You have the perfect storm. So I think, to your point, and what a lot of people have said, that these are smart people that I listen to, is they say, look, that extra wave in inflation is not likely to come. If it's going to come, it's actually going to come in like 26, 27.
When all that new money gets flushed into the system.
Yeah. And you have like, you could have this back half of 24 and then all of 25 and then a good chunk of 26 where things are getting a little crazy again. And that'll be because of all that pent up demand, because you can't, economics is very simple. It's supply demand. I mean, if you have all that demand, if you unleash that demand on a market and the supply side is not there, which we know it's not, then something happens to P, and P equals price. And so it didn't, like, you know, a lot of parents have put their kids in economics classes and made them go to university, and this is what they teach us. And so it's stupid, in my opinion, to ignore that. I mean, a lot of these real estate bears are like, no, the prices can't go higher because they just can't. Okay, well, but that's not how economics works. I'm sorry, but just the idea of things can't that's theory.
Yeah, there's got to be more behind it, right? Like if incomes get all cut by 50% and all the lending rules stay the same, yeah, well then they can't, right? But if lending rules change, or if amortizations change, or whatever the case may be, well, they can. Because what people, I think, forget a lot is that no one cares. I shouldn't say no one, but our society is now structured in such a way that people don't put as much attention on what the actual price of something is. Yep. They care more about what the payment on that is. Yep. So if I can buy a $10 million house, but I'm paying $100 a month, well, then give me the $10 million house.
Yes.
You know, and I'm not alone.
Yep.
Right. But so, and I think that's where, and I'm not saying that anything's going to change, but to say something can't with 100% certainty, it's just all probability.
Yes.
Like maybe it's unlikely they shoot up like that, and that's fair, but you know, but I got to think the banks, because right now with the less lending, less mortgage originations, less refinancing, so the banks are losing out on profits. So I'd imagine when the time comes where they feel that financial conditions are a little bit looser and their economies maybe a little bit more stable, so they feel a little bit more comfortable, they loosen the reins a little bit because they want to ultimately lend if they can, because that's where the profits come from. Like, am I missing something? Because there hasn't been that kind of that competitiveness in the mortgage market this year.
Yep.
Like past spring markets, there's always, I think it was it HSBC or Bank of Montreal BMO. Or something? It was a BMO.
BMO, the old always 2.99.
Yeah. Or like 0.99 at 1.1% or something. So
we didn't have that last year.
Yeah. So I'm just wondering, like, does that change again? If they're like, okay, we feel like we're through the worst of it, let's be a little bit more aggressive because we want to pad our bottom line a little bit too, right?
Yeah. Well, listen, I think there's obviously a lot of smarter people than you and I probably working at these banks. Maybe not, but I mean, I think you and I would want to assume there are a lot smarter people working at these banks. And I
give the government credit sometimes too, but
that's completely fair too. Look, you know, I think if I'm from the bank side, and if my economists at the bank and the people that I trust are telling me that, you know, 2023 is not even going to be a big summer market, then the bank strategy has always on the mortgage side been stay competitive when volume is high, right? And don't fight over business when volume is low. And what do I have to back that up? Well, seasonality, right? Why do all the specials come out in the spring? It's very simple, right? It's the most amount of transactions here in Canada, where we have a country that is very dependent on weather, and people's moods are very dependent on weather.
It's very obvious. Yeah.
Yeah. It's that, and the other thing too is, honestly, if I want to sell my nice house and I have a beautiful garden and I have a pool, am I going to sell that in December? No. I'm not.
Yeah, you can't get the emotions involved at that time with the garden, the landscaping, the pool, for sure.
And how many people Nick, how many people, like you work in real estate, how many buyers are like, oh, I can't wait to shop for a home in December. I can't wait to like tell my wife we're going to move in the middle of winter. And, no, that's not generally, you usually are only doing it if you're forced to, you're not doing a lot. So there's never been a lot of mortgage volume in December, January, February, March. So, and again, and let's go back. Do you ever see banks coming out with like massive specials in December, January, February? No, the specials all start in the spring and they go very hard. And that's the reason why, because that's when the volume is there. Banks are smart. They're going to fight over volume, and then they're going to pull back. They're not going to fight when there's no volume. And so if I'm a bank, I'm someone at the bank, and the economists are all telling me, look, it ain't going to be a busy summer this year. It's probably going to be the worst summer on record. Why am I going out and killing my margins? It makes no sense for me. And to be fair, I think some of these banks were actually squeezed anyway. We know of some of them that took way too much of the government handouts during COVID, and they got into balance sheet and treasury issues, and they had to deal with that. And that's something that also affected, I think the mortgage market, is that some of these, I don't want to say a lot, but some of these banks just were not competitive. There's one in particular, and those who know me know that I'm a big supporter of this bank. They couldn't even send this bank business. Their rates were so high.
Yeah. I think that was by design a little bit.
It was.
They came out and said they were trying to be...
They had a balance sheet issue. They had treasury issues. I've never in 20 years had a BDM, which is a business development officer at a bank. These are the people that we as mortgage brokers deal with. I have never once had any of them at a big bank come and tell me that a bank I work for has treasury issues right now. I've 20 years I've been doing this. It's never happened.
Yeah. Liquidity got squeezed everywhere. But it's coming back in the market. Like, we're looking at the M2 numbers in Canada. It's been growing the last couple of months.
Yeah.
Which is weird to think. You know what I mean? Like, you do.
M2 is usually a precursor, though.
No, I know. It's why you see some, like, well, I can't say this is why, but it's interesting because when you see global liquidity and Canadian liquidity and, along with it, when you see those numbers going up, it's not unlikely to see things like these tech stocks go up.
Yep.
See like some more money going into like the Bitcoin price, because people start just plugging it into other things.
Yep.
And even real estate, like we're seeing just even since the last Bank of Canada announcement, was that 2 weeks ago now?
Yep.
Right. As soon as that kind of said, hey, looks like we're good, immediately, like on listings that we have here for some investors, things like that, immediately the number of showings changed. Now, yes. I don't know if it's still the case, but from the few days that I was talking to some of the guys on the team at that point in time, they said those few days after, we've noticed a difference. Like
it's a sentiment shift, for sure.
Yeah.
I mean, but it's funny though. You saw it. You and Tom and all your Rockstar agents would have saw that in the spring.
Oh yeah,
they did the double pause.
Well, everyone started to shift.
Yeah, and then the June rate cut, just like you could just see the air come out. And then the July one was like, you killed whatever was left. Like, and then August turned out to be like the worst August. I feel like
to be fair, but I'm just saying, to be fair, when specifically for the real estate market,
yes,
like we're in the business, and I'm going to say that they needed to do that.
Oh, 100%.
It was already, I was just like, what is going on here? Because they're not fixing, to your point, they're not fixing the underlying problems. They're trying to manage, it doesn't work. Like, you can't manage a country the size of Canada with as many, the diverse economies, the diverse different industries that are in it, and the different provinces, how different things are structured in different cities and urban versus rural and all these different things. You can't manage it with one central interest rate policy policy for everyone. It doesn't work. So that's why they see the real estate market taking off.
Yep.
And they're like, oh crap, we want to slow that down, which I'm all for. Like, slow it down 100%. But when you do that, you're killing everything else.
Yep.
And there's a lot of these other businesses that shouldn't be killed. I think of some of the businesses that were just hammered during, think of restaurants, James, and stuff during COVID,
man.
right? How they were hammered, and now they're getting hammered again if they have any leverage. For what? It's none of their own doing, just because what their financial policy is driving people to try to scoop up hard assets like real estate.
Yep.
So now they're going to make all these other people suffer. Like, it just goes back to being a broken system.
Well, I think I had put out, so I don't tweet much. I know it's called X now, but I don't tweet much. And, but I had, this is like a couple months ago, this is sometime in October. And so I own some real estate in Aruba, and I have a business, I have a partner in that. And, he owns several very, 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 busy restaurants in Mississauga, right on Lakeshore in the Port Credit area. And he had sent me a text that night. He was in Aruba, and we were conversing about stuff with respect to our properties. And he sent me a text that basically, it got me thinking. And it was, he said, I got my, we were just chatting, and then his text says, yeah, I got my reports from back home, my sales reports. And this was the worst September we've had in our entire company's history. Now, of course, he's probably taking out, no, actually, because 2020 September, he said it was big. So it was the worst September he's had. And so you got to understand, and by that time, it wasn't like people were super suffering. Coming out of the summer, it didn't feel like people were like super suffering. And now it's kind of accelerated now. And I remember I tweeted that. I put out like just a tweet. And again, I don't have a lot of followers. I'm very rarely on that. And it got a crazy reaction because, I had said, hey, it seems like max pain is coming over the next 6 to 8 months. That was back in October, and that, I put out a couple predictions in terms of what I thought TIFF would do based on what we were seeing. Because I feel like in a weird way, I see, we're dealing with people's credit. I feel like I've been seeing things a little bit earlier and then maybe the general public. I'm just lucky, like my position allows me to do that. But it really felt like that was like him giving me that report, that from a retail side, from a restaurant side. And it's kind of funny you say that because, look, this poor guy got screwed over during COVID, forced to shut down his businesses. And, I think, it was very unfair what happened to a lot of these restaurant owners. And then they get their business back. And of course, now the government has let them down because the government let inflation get to a level, and by the way, that's something that they are in control of. So they let it get to a level where they now had to do something that's hurting who? Him again. You know what I mean? Like, this is a restaurant. He goes, imagine if I'm his, I'm like, why am I in this business? I just got completely my ass handed to me during COVID. Okay, afterwards, I probably made a bit of money back because there was such demand for people to go out. But then now, my business is suffering because the government let prices get out of control. And then they've now clamped on people spending money so that now they don't even want to come out and spend money on food. You know what I mean? And again, this isn't like, it's not like he has a restaurant in like Timbuktu, Manitoba. This is like Lakeshore, Mississauga, like super high traffic area. And he's saying worst sales reports he's had for a September in his entire company's history.
Well, look, I've looked at prices, and when I've been out, and it causes me to pause, and it's like, I'm able to pay the bill, but it's like, I'm looking at this, I'm like, this seems off.
Copacabana. Go have a dinner at Copacabana.
Yeah, I haven't been.
You used to, I love the place, but I mean, you used to go 4 people, man. Your bill was like 2 and change. You go 4. I just got back 4 people, $500, man.
I went to Chipotle with my family. I've shared that before. No, I know.
I know what you're about to say because I felt the same when I went there.
It was 2. It actually wasn't. It was only 1 kid's meal. It wasn't 2. It was 1 kid's meal. Yeah. I think not even everyone got a drink. I think it was because we're taking it out to go home. I think it was 2 drinks and meals for everyone.
$40-something.
No. $80. Now look, I splurged on guacamole, but I don't care. Guacamole is not that much.
Did you bring home a bucket?
I was like, so I was looking around, but like I'm thinking, I'm like, $80. That's not this. That's considered in my world. It's not like McDonald's fast food.
No, fast food,
but it's still fast food.
$10 or under per person should be.
And I was just like, so how many people are able? Like, I mean, you've got to make decisions at that point.
It's actually really interesting you say that because you're actually the first person. Like I don't know. Maybe I'm like a gauger. Like when I'm like around people, and I'm always like, I'll be like, it's just me, or like, is things getting crazy? And I always think to myself, I'm like, because normally I'm not, I would say you and I are similar. Like, it's like I can pay the bill, you know what I mean? But Like now I'm actually looking at it. Like before it's like you bring the bill, it's like just do the tip, sign it, send it back. Like I'm not paying
Well,
attention.
now I want to see how bad I'm getting ripped off. And it's not even ripped off. I shouldn't say that because I understand there's costs and I understand costs have gone up, but it just feels like it's hard to feel like there's value there anymore.
I agree.
Right at certain price points.
And that's scary. If I'm like, imagine if you and I are in the restaurant business, how scary is that first of all, if that's what it costs people for our business to make a profit, that's scary. And then what's scary is now that people are actually talking about it. And so if you and I are talking about it, who else is talking about it? And so I'm sure a bunch of people are all watching this podcast going, I'm talking about it too. You know what I mean? Like we're finding the same thing. And it's just like, at what point? Because the problem with inflation is I don't think we're going to be in a deflationary situation anytime soon. So it's not like prices are going to go. And the thing about inflation, and I think what tricks people is that they're like, oh, inflation's coming down to 2%. Okay, that's great. Well, no. We're not getting that 8% back from June of It's not how it works. Inflation going down 2% doesn't erase the 8.1% increase we had in goods, the basket in June of 2022. Like that's not, we don't get that back. So I'm wondering what happens. And sadly what happens is, and you and I know this, is businesses fail. There will be lots of businesses and industries that will fail because of this, and there will be new opportunity. But sadly, there's going to be failures. And I just think, and I want to put this out there, I think that that's actually incredibly sad because we had a person in our country who is in control of these types of things come out in the later part of 2020 and tell Canadians,
go borrow money. Interest
rates are going to stay low for a very long time. And even said if you're a business owner and you're thinking of making a big investment, make it. You can feel comfortable. Well, guess what? You did that. And you know what? I know I have clients like this that listen to you, okay? And you put them in a bad spot. And I think that's incredibly sad. And I think it doesn't get a lot, you'll go on Twitter, you go on social media, and there's a few people that'll be like, talk about it. And you always think, oh, they're the outliers. They hate government. No, I don't hate government. But I got to tell you, that was the most reckless statement any person that's tied to finance and has an audience to a country has ever put out, in my opinion. Like that was so incredibly reckless. He promoted the fact that people should go and do that. And then literally a year, within about 14, 15 months, biggest rug pull out. Nope, guess what? I made a mistake. Inflation got out of control. But you would have thought by then, if you were going to put a statement out like that, you had the goods to be able to put that out, and you didn't.
You could have seen, it didn't take an economist or, anyone with any substantial level of intelligence to figure out quite early after the initial scare of COVID that the economy was not in as bad shape as initially feared, and they could have started adjusting it quite quickly.
Yes.
Instead of letting it run for 2 years, to the point that it was a flipping inferno, and not just in real estate. I mean, in every sector, like it was just outrageous.
Yeah. And what was the reason for that? I always think to myself, why do we think that they didn't? In the face of rising inflation, I mean, that's when they started throwing out the famous transitory word, which everyone claims to know what it meant. But the truth is everyone had to go and check Google as to what that meant when all the government started, it's transitory. Don't worry. It's transitory. It's fine. Don't worry about it. You're supposed to know these things. And was it politically motivated? Because if you think about it, if they were to say, no, inflation, inflation's going to keep going up, because of all this, the reality is would that have had a different narrative with respect to how the governments were pushing, to keep everyone, they were almost saying like they were keeping us hey, you're going to get locked down soon. It almost felt like there was this look out there, we're going to, if cases spike, and it had Canadians and people all over the world on edge. We were literally sitting there waiting to see what our government was going to say. And I think what makes that so reckless is that we were in a position at that time to have to listen to the government. And then they came out and told us, go and spend a ton of money, go and make purchases. So it's like you took a lot where people really were vulnerable to listening to the government, and at that time put out a statement like that. I think that's what makes it 10 times more criminal, because they had the voice of all they had the people's attention.
I grew up in a household where during the war of the former Yugoslavia. So our father's Croatian, mother's Scottish, right? As you know, so on the Scottish side of things, they were always at odds with England, and there was always kind of just things going on there, whether it's battles in the past or whatever the case may be. So it always felt like there was two sides to that story.
Yep.
And then during the former Yugoslavia war, obviously our father's Croatian, so he was supporting Croatia separating into supporting their independence.
Yep.
And we were watching the news. I was watching the news at home, and my parents were like, well, that's not actually what's going on, because he's talking to family. He's like, I'm hearing this. And then we had a shortwave radio and we're listening to news there, and we're getting a different side of the story. Different. So I think that's why, because some people look at me because I'm so not jaded by the government, but I don't believe them ever. So it's why I took that approach, whether it's, whatever you want to call, whatever you want to say, whether with COVID or anything they say, I'm just like, I don't know if I fully believe them. I want to go do my own research and make my own decision. And, I think that's why I'm struck. I'm like that because of my experience as a kid. I don't really know because most people I know aren't like that. And I found
data though, right? Like it's data. Like you've had enough experience. You've had enough of a history where you can say I feel like I was lied to or wasn't.
But in Canada, that hasn't happened as much.
Fair.
So people, like the amount of people that blindly over the last few years in multiple instances have just turned to the government, heard something and be like, oh, okay, that's factual. That's true. I'm just going to believe that, surprised me.
Yep.
I was like, really? And I was like, looked at the weird one, and I'm not even talking about vaccines and lockdowns and stuff like that. I'm talking about like anything else, right?
Like we're going to build 1 million homes and we're going to make sure everyone's exactly.
And like anything. And I'm like, why do people believe this? All of a sudden they just believe that they're telling, and if they're not telling the truth here, why do you think if they're going to tell you something else, and they're automatically, they haven't told you the truth for these 5 things, but now this 6th thing that they're saying is going to tell you the truth? Is that just because you want to believe it because it makes you feel good? Like I still haven't been able to piece that one together. And I'm like, why am I this person that always questions things? And I think it was from I'm blaming my parents. Actually, I should say I'm thanking my parents because I'm glad. I'm glad. It's worked out that way. But
what's sad though? You and I, in a weird way, there would be people, and I'm sure there's people even today that would be listening to this that would kind of maybe form an opinion that you and I are like conspiracy theorists. And it's kind of funny because you and I know you and you know me, and we're not. No. I mean, the last thing I'm thinking about is spending time thinking about is, things like that. But data is where I come. And 100%. I feel like there's been too many times that I've caught them leading me down a road that didn't actually come to the way that they had said it was going to.
Yeah, and for me, it's not just with the government. Okay, so I'll remove.
It'd be anybody.
Well, with Tom, sometimes Tom and I will get into disagreement because Tom he'll be like, Nick, I feel like it's like this, and this is the right thing, and I'm like, Tom, what the hell are you talking about? You feel. Look at the number. Here's the spreadsheet I put together. Look at the numbers. Look at the numbers. This is what it is. I know that's what the numbers is, but I feel like this. And I'm just like, oh man, I can't handle it. So funny. So we just operate in different ways that way. And I'm not saying my way is right and his way is wrong. I'm not saying that at all. But it's just different people are wired. But so I'm not a conspiracy guy. I just like you said, I just like data. And Tom will say, and that's just one example, but I know Tom often talks about with anything he does, he wants an information advantage.
Yes.
He's always searching out that information advantage. And that's why we look for that, because without that, you're flying blind, because who the hell knows who's guiding you, right?
No, it's true. I mean,
let's switch just to, okay, so hold on. First we got to try Hornitos.
Hold on. So let's make sure. Okay, this one was a banger. So I'm taking a picture of that.
I'll tell you, yeah, it's good. Let's try this.
Like usually
Hornitos is supposed to be good, but I don't know.
Tequila is not the way to do it.
I don't know if this is a good Hornitos or not, because I know there's multiple.
Hornitos. All right, you're going with sip again? I'm going to just do my normal shot.
Yeah, the flavor is different. It's not bad. I think I like this one better, though.
See, this reminds me of 1942, man. I'm not even kidding you. It's got like, there's like a smokiness that I don't love.
Yeah. This is nicer. This is
good.
smooth.
I mean, that one that's fire, actually.
It's, I don't know if it's kind of sad how many different bottles of tequila we have. I don't know if it's good or bad, but there is a lot of types of tequila, because I think there's 3 or 4 more in my office so we could try.
we were going through the bottles earlier, and I was trying to get Nick to shoot vodka, but he's a smart man. He said no way. So.
No, because there's 1942 there, Class Azul, these two, and I think there's 1 or 2 more. But
yeah, but your 1942 was like unopened. I definitely did not want you opening that. That makes no sense.
can always, trust me, someone else can open it. So
they'll appreciate it, at least, I would say.
on the mortgage side for people, what are you seeing? So just strictly on mortgage side, because we got off on a little bit of a tangent there, worth kind of exploring, because it's interesting to see your insights on the bank side too.
Sure.
But I guess it's harder to, like, for people qualifying right now, like, what are their options? Because they have to qualify at a higher rate. Like, where are the opportunities for people? And I know the opportunities the types of opportunities have changed from a couple of years ago. But what are you guys seeing? Like, where are you guiding people towards? How are you helping people with stuff? Because I know there's some challenges with the different things, right?
Yeah, it's. I mean, I'd say from a broad standpoint, it's just all about your strategy. The idea is you don't want, like, I don't, well, and it's obviously with rates coming down, it's a little bit different, but if you transport me back 3 months ago, 4 months ago, and previous to that, I didn't want anyone taking a 5-year fixed, a 4-year fixed. I didn't even love people taking a 3-year fixed, to be honest with you. Although the problem is that the 3-year fixed kind of became this like hot product because there became this demand for it because it wasn't a 1-year and it wasn't a 5-year. And then we could see the banks clearly could see there was some demand for it. So they kind of started slowly battling each other for the 3-year business. So you saw the 3-year actually rate become this weird popular rate. I didn't love it though, because I'm a thesis guy. And my thesis was always, when they had done a massive 4% raise, to interest rates, it didn't, I mean, at least my mind and my Tom Karadza feel, if you will, was that it was too quick. It was too fast and it was too quick, and that we will have to reverse course probably quicker than they wanted to. And so with that, if you form that thesis, my idea was certainly that hopefully rates would start coming down by the fall of this year, maybe to the end of this year. That didn't happen. We saw the higher for longer jump into the spring, right? When we had the Bank of Canada do the increases. So it really just became like a thing of strategy to be like, okay, well, what are we taking? Like, if you have a renewal coming up, you need a mortgage today. If, you're buying a home, you need a mortgage today. The idea was really trying to convince people not to take a new mortgage if they didn't need it.
Yeah.
You know what I mean? Like, that was really and that, some mortgage brokers, would be like, well, how are you getting paid? Well, it's not about getting paid. It's about, like, if you be a mortgage broker, you have a fiduciary duty to do the best for your client, and it shouldn't never be about commission or pay. It should be about guiding people the right way. And the long game is always you're going to win out there. But yeah, I mean, I think the biggest difference for me as a mortgage agent, mortgage broker in the last 20 years compared to today was that I'm having more discussions about strategy, and we're taking gambles here. I mean, let's be realistic here. My strategy was that I've been telling people that I don't believe a 5-year fix, a 4-year fix, or even a 3-year fix was necessarily a smart thing. I think taking a 1-year fixed, sucking it up with the higher rate so that you have the ability to be a free agent in a year when rates could be lower. I thought that was mathematically a very smart move. Signing into a 5-year fixed at 5.99 or 6.19, I think you're going to have a lot of regret potentially when there's a 3.99 5-year fixed available. And the problem is regret's one thing, but ability to get out of that mortgage is another thing. And you wouldn't be able to, because your penalty will be like insane.
Can I ask you something around that? I was curious about something. If you go into a 5-year variable rate mortgage, so the penalty is typically
3 months interest,
right?
That's it.
But then, so let's say now I have that mortgage for 6 months.
Yep.
And an attractive 1-year rate or 2-year, whatever it is, less than 5 years, right?
Yep.
Would come out. So I'm like, okay, I actually want that 1-year rate. So I lock into the 1-year rate.
You can't.
Oh, I can't. So what can I lock into?
I'll explain it to you. It's actually a really, really good question. And there's a lot of...
Every time I try to figure out a workaround, they've always closed the loophole.
All right, so here's the deal, right? These variables are 5-year terms. So it says to you in that variable term that you can convert at any time to the bank's best fixed rates. With that said, there's a caveat in there. If you've signed for 5 years and you're 1 year into the mortgage, okay, at best, the lowest term they'll offer is 4 years. Why?
Got it.
Because you were with them for a year. You've signed for a 5-year, so they're not going to let you convert to a 1 year because 1 year from now you're renewing. So they're going to go, no, you signed for 5 years. Now you're open at 2. No way.
Yeah, I should have known that.
So that's the kicker, right? Well, the banks, they always loopholes are closed very quickly.
I'm surprised. I didn't know if maybe they would let you could lock in for the 1 year rate, but at the end of that 1 year, you're
forced to stay.
You're still forced to stay with them.
Problem
you
is,
have to select another product or whatever the case.
I get what you're saying. The problem is legally, if they convert to a 1 year,
they have to let you out.
They have to let you out.
So
that's why they don't. So
right.
Yeah, but I mean, it's funny you bring up the variable because look, the variable was actually at a rate. Most variable rates at most banks for most of this year were at a level where it was similar to the 1 year or the 2 year rate. But what's happened in the last couple of months is the variable. There's been a couple of lenders that have come out with these nice fat prime minus 80, prime minus 90s. And that led to obviously being able to offer a 6.3, 6.4 rate. Well, the 1 year rate was sitting for a long time in the low 7s, high 6s. So the variable became popular again because, first of all, it was lower than the 1 year and the 2 year. Right. And remember, again, it's all about like what the client, when you're speaking to a client, if we've already assessed the situation that we don't want to be taking a 5 year fix, we don't want to be taking a 4 year fix, excuse me, what is left, right? Well, the 1 year fix strategy is nice because we want to be a free agent potentially if rates are down. 2 year fix has a similar thing, but giving you a little extra protection. But the variable for a while there, when its rate was the same or higher than the 1 or 2 year, is that even something you want to be in? Not really. Bank of Canada seems reckless. They're pausing and increasing, like you can't, but we're now 3 pauses in a row. The Bank of Canada has said they're looking at rate cuts in the second half of 2024. That is an official statement from Tiff Macklem. Now, again, I don't know if we want to believe everything Tiff says, but in the event that he is right this time, right, the variable actually presents itself an opportunity. And that opportunity is that if Bank of Canada starts reducing rates, let's say in second half, you're going to ride that rate down. If that rate's coming down, the fixed rates are already coming down before then. So now you have this ability, to convert. And I think that's the beauty of the variable and the 1 year. They actually have similar trajectories. The 1 year, you're doing it because you want to be a free agent. With the variable, you're not a free agent, but you have this clause in your contract that says, hey, I can opt out on my variable and take a fix at any time. So that's the thing is, to get back to the question, this was like the longest answer of a question you've ever given me in probably 20 years I've known you. But
there's been a lot.
there's been a lot of questions. And you probably hate hearing and listening. You're probably like, man, I've heard this guy talk for 20 years. But no, the reality is that the variable came back into play. But these conversations we're having with clients aren't about like, oh, you're approved for this and you're going to do this. No, you're barely getting approved. The stress test is like on some products is like 8%. Like, you know how hard it is to qualify someone for a $700,000 mortgage at an 8% stress test? Do you know how much income you need to qualify for that? Like, it's ridiculous.
How much income do you need? Like, if you have to ballpark that,
on that?
Yeah.
So $800,000 mortgage. What did I say? $700,000 mortgage at an 8% stress test.
Yeah.
Totally off the top of my head.
Yeah. Just
couple hundred
grand, yeah.
And how many families are making a couple $100 grand? And how many properties are you going to need a $700,000 mortgage? A lot.
And I was going to say, depending on where you are, like if you're in Toronto, a $700,000 mortgage. It's
your loan to value on that is going to generate. I'm going to guess it's low because your property value is going to be high.
There was a day when you had $1 million property. A $1 million property looked a lot different, even 10 years ago. As today.
It's funny. I will say this is for the listeners of the podcast is I will always say this is actually a really cool story is that when Nick and I met, and we had met actually before any of us was in mortgage and real estate, but when we started actually working together, can you imagine? Like I was telling this story the other day because it came up the other day and I was like, Tom and Nick were buying single family detached homes in Hamilton on the mountain for $200,000.
The first home in The first home you helped me buy was
Whitney.
It was actually
Which one? Wait, Whitney was one of them.
Mississauga. The first time I came to you because I had used a different mortgage broker, met you at the gym.
Yep.
And that mortgage broker, I didn't know anything at the time, so he got me pre-approved.
Yep.
So I thought I was approved, and there was demand for this property, but on the listing it said for land value only, because I guess there was what they thought was a major structural problem in the basement. Didn't end up being that major after I got it looked at, but. And that's why I thought I was pre-approved. So I went in firm because I'm like, no, I'm good. I'm pre-approved. But then the guy's like, well, no, it says for land value only. The bank won't lend. I was like, oh, no.
Yep.
So I was like, oh, I just met this guy, Dave, again at Gold's Gym.
Let's bring him the problem file.
On the hammer strength with the white and red hammer strength machines. Right?
Gold's Gym was the best, by the way.
Oh, at that time? That Gold's Gym, Mississauga? I mean, if anyone is listening, it was at that Gold's
Rexdale.
Gym.
Yeah, not Rexdale. Something with an X. What was it? What was the street it was on?
Oh, it was on Rathburn. Rathburn and Dixie.
Yes.
Dixie is what
Dixie. Dixie.
So it was there. And man, and just on the weekend, I met the guys that I kind of knew from high school. I knew one of his good friends who's out in Costa Rica. He called the guy in Costa Rica right on the spot. He's like, let me talk to this.
Look, there's Nick.
Yeah. And I was like, man, these high school ties go back. And that's the time I was at Gold's Gym. Right? So, but anyway, so we met there, and then you helped me out of that situation. Well, you helped me get the mortgage, and
I was so new in mortgages at that time. Like it's funny because like when you and I and Tom all got working together, it was actually at a time where we had all kind of you guys weren't in real estate, but you were investing in real estate.
We had just started really investing.
It was like, what was it? A year, not even maybe a year or two later. I remember you guys called me and you're like, okay, Dave. Tom was like, I'm quitting my job at Oracle.
Yeah.
And Nick and I are going to build this real estate company, and we want you to do all the mortgages for our investors. And I remember just being like, and I got to be honest, that felt like the coolest thing at the time in my career because I was so young. I was in my early 20s, and it's like, two really smart guys that are investors are coming to me and saying, we're going to start a real estate company and we want to partner with you because we want you to do, we're happy with you doing mortgages. So I remember that was actually like a very big confidence booster for me in my career because it was like, man, these guys, like, not only that, I remember it was weird. I felt a weird bit of pressure because I remember it was funny. Tom, like, let's be realistic. I mean, I'm not going to put the number out there, but Tom was making money. He wasn't doing bad at Oracle.
Well, Tom shared that our accountant at the time looked at him and said,
told him he was crazy.
He's like, are you sure you want to do this?
Yeah.
Yeah.
Well, because I thought the same thing. I remember because you got to understand, like at that time in mortgages, I was this early on. I hadn't seen so many T4s, and I remember at the time Tom's T4. I mean, I
no, he was making.
It was good. It was good
he
money.
He was doing well. I mean, he was earning it. Like he's producing results, but he was making good.
And for me as the mortgage guy, I was like, wow, this is like this. I love working with T4s with this income. I can do a lot. And then I remember him going, I'm going to quit and become self-employed. I remember just like in my mind, it was a weird thing, right, for me as the mortgage broker, because I'm like, oh, that sucks. Because now I can't get Tom any more mortgages. But wait, Tom's going to start a company with Nick, and potentially I'm going to get a lot more mortgages. So I remember it was a very interesting thing for me because I was like, are these guys crazy? But we had always talked a lot. And I remember that it was at the time when rent to own was like I will say this, you guys, it's so funny. Like when I think about this stuff, because like no one, you never talk about when you started it, but like you guys would go out to the States. I remember you guys would be like, yo, we were just out in like St. Louis or some like crazy place. And you're like, we were just at a conference and you know what, we're picking up on this rent to own thing. And I remember, and then rent to own all of a sudden in Canada, you guys brought it in. I mean, it's funny because anyone right now that's listening to this, that's like, oh yeah, I heard rent to own. I remember rent to own. They won't know the truth. The truth is you and Tom brought rent to own to Canada in real estate. And no matter what, anyone who wants to claim that they did too, you're a liar. You're a liar. And I know you guys brought that entire strategy. And certainly that strategy is not a strategy that necessarily is going to work today with the prices, but you guys brought that. And a lot of people also don't realize, and it's funny because I was having this conversation, like in part of the conversation I was explaining how you guys did something very, very, very interesting and something that is now done by almost any real estate agent that's working with investors. But you guys were prospectors. You guys went to areas like you started in Hamilton. And then once you felt Hamilton prices were getting saturated because you and your investors were buying them up, you were already figuring out the next areas to go to. And a lot of people won't even know this. Cambridge. Guess what? Cambridge was like the second major city that Rockstar, at the time it was Income for Life, went into, because you went from Hamilton, you started trying to find outliers.
You might remember more than I do then.
It was Cambridge, then it was Kitchener, Waterloo,
and over to
Guelph,
Brantford, I guess.
Eventually ended up at Brantford. But you guys were constantly looking at the next area that you could bring to your investors that had value.
We bought Burlington Townhome. So first of all, I appreciate you saying that.
That wasn't to kiss your ass. That's more or less. I have these conversations a lot with people because they ask me. Like, I get a lot of questions about that, and it's just funny because I always say, Nick and Tom were prospectors, man. They were on the ground. They were like going to these cities and actually like going there and seeing where the school systems were. And it wasn't in 2005. There wasn't the Google, and everything wasn't as like popular. And people don't realize that because they think Google's been around forever. But it's like, you guys were boots on the ground.
I was laughing about this with my wife the other day. I was like, when I started doing this, I was printing out. So at least we had access to MapQuest. We didn't have to do anything. But I was printing out like the map and then driving to the properties. But like the rent to own the thing about the rent-to-own strategy is we probably popularized in this area because we did a bunch of them with a lot of investment.
Massive.
So in the GTA, we had to really educate people when we first started doing it. There were a handful of people doing I would see ads. It was like lease with the option to buy. The thing is just that little twist on words and making it rent to own from a marketing strategy really made a difference. And it made
lease to own just sounds crappy.
Yeah, it made it very clear. A lot of people were advertising with lease with the option to buy.
No, that's a terrible tag.
Yeah, so it was just, yeah, it was, and I remember when we first started, we split up, and I'm like, okay, Tom. Tom's like, I'm going to go to this Hamilton place, and I'm like, okay, I'm going to go to Burlington. I'm going to look for
an. Tom, make sure you have a bulletproof vest on. Right? At the time,
and I was going to Burlington. I knew nothing about Burlington at the time. We grew up on the east side of Mississauga. Burlington was like the edge of the earth to us at that time when I was younger, right? So I was driving around Burlington, and Tom was driving around Hamilton, and we talked afterwards. I'm like, yeah, I think I found some couple good areas. He's like, I found this area like the Hamilton Mountains, like some of these areas we've seen in the U.S. with these kind of old kind of starter homes though.
Yep.
And then we looked at prices and yeah, it worked. And then we were also doing Burlington properties. We started really with townhomes when we were doing rent-to-owns. We were buying those townhomes. Do you remember like about $250?
Yep.
Those townhomes.
And at that time, remember you guys were telling me that was too expensive. You guys, I don't know if this is going to work. It's very expensive.
Well, compared to 200 detached in Hamilton, and then but then those like the people that are early investors with us that bought some of those properties, they just
if they're holding any right now, they're laughing.
Well, some of them.
Some of those.
Yeah, some of them. The same ones I know, and it's worked out very well. And but anyways, it's been it's been a journey, and we couldn't do it without mortgages. And I know that investors kind of like a lot. You guys, you and your team helped a lot of people, right? So it's kind of worked out that way. But I want to ask you one other thing before we kind of get going. I know we're catching up on time here, but back in I can't even read my own writing.
That's how you know we're old, man. We are old.
Here's what it was. In 25.
Yes.
Okay, so the next big, so I know 24 has more renewals than 23. 25 is when it really starts to get big, right? 25 to kind of 26, right?
That's crazy, yeah.
Yeah. So what if rates are where they are today?
Yes.
Okay. So let's call it a 5% 5-year fix.
Sure.
You did a ton of these mortgages that are coming up for renewal.
Yes.
So you saw the people that were getting these mortgages. You saw their incomes, their credit scores, whatever. If rates are where they are today,
yes,
do things break?
Yes. I don't want to say. It's probably sick that I say that fast. Yeah, no, I think. Well, the only reason I say it so fast because I think about it on a daily basis, on an hourly basis. I consider this because I do believe we are in a very, very interesting time that I think some people are oblivious to it. And if they are, that's great. Good for you, because the less time you have to think about bad things, the better. But yeah, no, I think if rates are where they are at today, and 5% is a generous rate, generally speaking, today. And so if those people are going from 2.89 to 5%, I think there is a lot of people that are going to be in financial stress. And
if they're where most of them are today, and I guess that's probably closer to 5.5 to 6.
Depends on the term, yeah. But I mean, rates are not nice. 5s and 6s are just they're. I will say this. I think it even almost in a way it goes without saying. Tiff Macklem is already saying we're about to hit major pain and that rates are likely going to start coming down. So that that should be telling us,
because it feels like
that's a signal.
Yeah.
The signal is things are messed up. If people have to start renewing if there ends up being over the course of a 3 or 4 year period where almost everyone in that 3 or 4 year period was renewing at 5 or 6%,
it's
the amount of money that is going to be taken out of the economy is got to be scary for them. It has to be.
Well, so on the flip side, we talk about the government side a lot, but the amount of money going into interest payments on the government debt
that's
skyrocketed as well.
Look at the U.S. Their interest payments, just the interest payments alone are rivaling their military, the amount of money they spend on their military.
Yeah, they're approaching $1 trillion. Like it's.
Well, I think this goes without saying. I think you and I, we talk about this a lot because we're nerds, but the system is broken. And the people that are running the show are just simply trying to make it so that doesn't completely fall apart.
But an election year in the U.S. is next year.
Yeah.
And how can
this year? Well, no, sorry, you're right.
Well,
I'm already thinking in January.
But so the election's coming up.
Yes.
How can they keep rates high and keep this pressure on? I know the bank's independent. Yeah, right. But it's supposed to be. But how are they able to keep rates high and keep the economy, squeezing the economy and have any hope of the incumbent president getting reelected? It's very, very unlikely. Like that, those two things almost never, ever, ever go together. And it feels like that's why the Fed's already, because I was like, why would the Fed come out already?
That was crazy, by the way.
Yeah.
That was insane.
I know.
To go from hawkish and then the next month, fully dovish.
Yeah, I'm like, what is going on here?
That was weird. I actually thought, I gotta be honest. I thought there would be like a transition in the language where it goes from hawkish to we're like chilling for a bit, but to actually come out and state from the month previous, he literally said, we think we're at a good spot, but we're ready to continue to increase rates, to the very next meeting a month later saying that, we feel like we've done the right job and that we're already looking at cuts in 2024. Like you saw what the stock market did over the course of 2 or 3 days after that. I mean, that was actually such an insane statement to make. Yeah.
I just saw this one today from this was in the Wall Street Journal. One of the San Francisco Fed president said, in quotes, so it said central bank must make sure, and then in quotes, we don't give price stability, but take away jobs. Yep. So again, another dovish statement. Yeah. Because they're saying they might, they could. Well, they're scared. That rates could be needed, right? Yeah. So it's really, it's broken.
Listen, bro, if the biggest economy in the entire world, the guy who's in charge of interest rates there says 1 month that he has hawkish language. And the next one, if that doesn't tell, in the next month he's dovish, if that doesn't tell you that the entire system is on shaky knees, then I don't know what else is. That
things change, they just don't change that fast. Like if you have access to the data, they don't change that fast.
No, right? They don't. And so I wonder, was it politically motivated? I mean, and I think that was someone like me and you who study this stuff and we're just complete nerds about that I did not expect that. That was actually complete, and I know the market didn't expect that. And the crazy part is if the market doesn't expect that, that's even crazier.
Yeah, because usually there's leaks going on, and they can see what's going on, right?
Of course.
Okay, cool. So we're almost out of time. This was actually a good, interesting conversation. But hey, I just want to ask you, your next year,
yes,
you are doing something. We'll have you back to discuss it more. But just so it's on everyone's radar. It's kind of cool what you're doing. So you're calling it the Dave Butler 100.
The Dave Butler 100. Right. So I have been super blessed in my life and in my career that I've been able to work with lots of real estate investors, and I've been able to help them, achieve their goals and their dreams. And that's been cool. And I've obviously built a great career out of that. I have a child. I don't know. You have so many things, your reflection time is different now. I think differently. I know we've talked about this before.
Those damn kids change everything.
They literally change your entire outlook on life. And, I want to, I'm in an interesting thing, right? I have my child later in my life. So, he's kind of seeing me in this like semi-retirement where I'm kind of like just moving puppet strings, if you will. And I kind of want him to see the real Dave, but I want him to grow up and see how his dad really built his company, not as like some, guy just, in a CEO role. So, and I wanted to also give back in a weird way. A lot of people don't know this, but when you're working with real estate investors, those mortgages are not eligible for the lowest rates in the country. there's very limited amount of lenders that we can even use for investor mortgages. And those lenders cap, first of all, rental mortgages have higher rates than owner-occupied mortgages. And then the banks that you're dealing with that will do the rentals, they're not as open and liberal to things that you can do, i.e. giving up commission to get my client a lower rate. A lot of those banks won't allow that on rental stuff. So in reality, if you come to me, Nick, and you've come to me and I get you a mortgage and we talk about it and I go, yeah, I wish it was your owner occupied, because if it was your owner occupied home, I can get you a 10 times better rate than what you're getting now on this rental. So I thought about that a lot, and obviously I wanted to do something. I tried to think of something cool, and what I did is I actually did I did an audit of my time. I actually did an audit to figure out, based on all my different, the companies that I own a brokerage, what do I do? What's my time? How much time would I have to put into a project to try to help other Canadians? And so I figured out that based on my time audit that I did, that I could probably help 100 Canadian families that are looking for a mortgage for their owner-occupied home. And that's really, you gotta be very careful here, because rentals, I can't get the super lowest rate. It's just not possible.
Yeah. The banks have different rules.
The banks have set it so that you can't get the same rates as rental and owner-occupied. So I would like to spend the time that I figured out that I can within my days that I can allocate to this project to help 100 Canadian families get the absolute lowest rate. And what this means, and when I say that, I'm talking about literally giving up as much of the commission that I would be able to get, that I'd be getting from that bank. What they call it, I hate the word commission, finder's fee. The finder's fee, I can actually give that up to produce a lower rate. And so that was something I want to do. And so what we've decided is, starting March 1st next year, I'm going to introduce this Dave Butler 100 Canadian families, and you're getting to work with me. It's not, again, a lot of people, if you work with me, you end up working with my team. No. This I'm putting as me. You're going to work, I'm going to be doing the phone call. It's going to be my cell phone. That's going to be the 100 people. You're going to have my cell phone. You can text me, you can call me, whatever it is. And I'm going to be available to 100 Canadian families to get them the absolute lowest rate possible. Again, it only works for owner occupied, but that's something we're doing, and we're going to put out, I got a website currently being developed for it, and that is my way of kind of giving back. I'm super blessed. We just talked about, I was on a vacation in Europe for 3 months. I was in the mountains in Canada for 2 months snowboarding. I am super, super lucky. I've been able to meet people like you and Tom and Mike DeZormo and everyone else at Rockstar. And just, I've been super blessed. And I don't know what it is, but I have this feeling that I want to give back, and I want to, get back into it's weird. I don't know about you, but this is kind of I was thinking about this on the drive in. I was like, this is kind of like Tom and Nick going out and showing homes again.
It's kind of nice.
It's fun.
Yeah.
I'm excited to do this. I want to do this. It's different.
Yeah, that's cool. I recently closed on a property that I have with, you guys did the mortgage.
Yeah.
So, and this one's close to home, and it's because I wanted my kids involved, and I've shared that before. And, I was kind of because I had to do it and show them I was the one doing everything again.
Yep.
And yeah, there was a lot of pain in the butt to it. I was like, oh my God, I forgot how to do this little thing.
Yep.
And how do we do this now?
But it's different and it's fun.
But it was cool. Once it was done, I was like, oh yeah, because there's always been that satisfaction.
Yes.
And
yes.
Anyways.
Well, as you grow companies, look, you and Tom are in a unique position. You've grown a company from literally something that started from nothing, and is similar to me.
Yep.
And so I think we get lost sometimes.
Of course,
we 20 years in, 15 years in, you end up becoming in a position where there's things that I loved doing that I'm not doing anymore. And so for me, it was and it's funny you say that, because it was I remember I did a couple owner occupied mortgages for investors that wanted to just get their owner occupied mortgage. I remember thinking man, that was so much easier. That was so cool. And I didn't have to spend so much time on it, because you're not planning. When you're doing mortgages for investors, there's a planning aspect that always has to be constantly in the conversation of when you're moving their mortgages around. But with owner occupied, I don't have to do that. And I can just get the bare bones mortgage brokering. And I, first of all, selfishly, I find that easier, but also I find it a bit more rewarding, because, when it's your owner occupied home, that's your house. And I did a bit of math, and I thought to myself, look, if in 1 year I help 100 Canadian families save $10,000 over a 5-year period. So say if they take a 5-year term, if I'm able to get them a rate that saves them $10,000,
that's
100 people. It's $1 million, my man.
Yeah.
So I was like, well, that's cool. If I can take them, and it's a pittance But if I can take $1 million out of those banks' pocket and put it in my customer's pocket, I love that idea.
That makes a real difference for people, man, especially with where things are now.
Every dollar goes far. It goes less, and I want to make every dollar go a little bit farther for them. So
so the website's being developed for this. This isn't until March.
This is Dave Butler.
So how do people follow you so they know, like, where do people, first of all, if someone wants to reach out to you now about something?
Well, I've always been hidden, right? So I mean, they always for a while there, I've stayed hidden because I like to stay in the back and do the underwriting, and I used to have obviously everyone else in front, but this will be me. So the website's going to be davebutler.ca. It's being developed right now.
Okay, but there's no Dave Butler. Okay, so Dave Butler.ca in the future.
That's March 1st. It's launched. It's going to be there. If you want to follow me anywhere, I'm on Instagram. I'm at Dave Butler MTG. So Dave Butler, it's like acronym for mortgage. At Dave Butler MTG on Instagram. I think I'm going to start getting a YouTube channel. I really want to promote this. I really want to. This is big for me. It's a big venture. It's at the end of the day, I think, and what's cool. Sadly, if I'll say what's cool about it is that we're putting my child in daycare soon. So I thought to myself, okay, this is it. I got some extra hours. I want to put this in. I want to do this. So so follow me on Instagram, Dave Butler MTG, and then I'll have my website, davebutler.ca ready. And of course, still run all my brokerages and everything else. But this is a side project that I'm really excited about. And anyone who needs, contact me. If you want to be part of the 100, let me know. I'm excited. And again, it's just me. It's me and one underwriter. I'm not looking to build a squad. I'm not turning this into a business. This is just every year for as long as I can until maybe I have the next kid. I want to help 100 Canadian families.
Very cool, man. Yeah, that sounds good.
Thank you,
Dave.
Thanks for bringing me on, by the way.
No, dude, thanks for being here, man. Thanks for drinking.
Thanks for the tequila, and shout out to Terramana Tequila.
Hey, we're supposed to keep that quiet, Dave. All right.
We like $80.
We like $80 bottles versus the $400 bottles.
Yeah, I already imagine it's a $300 bottle.
You know what we're gonna do? I should do around Christmas when I have people over. Whenever we get together, we're gonna do blind taste tests.
I love those. I love seeing those on Instagram.
Yeah, we
those
should do
are
that
so
with
cool.
5 different bottles and see who likes what.
I already know. I will pick out the 1942 in a heartbeat. I already know that.
Now I know not to bring you anymore.
No, you guys got it for me, and we crushed it that summer. Remember, you brought it to the cottage, and we crushed it. But I mean, and then I've had Azul, but then it's oddly enough, I'm telling you, the Casamigos has been my tequila for a long time now.
Cool, Dave. Thank you, man. Appreciate it.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.